The vault door clicks shut and the heavy lock spins. Inside sits the ultimate symbol of perfect financial safety. Stacks of crisp paper money rest in total silence. Nothing can touch this wealth while it hides securely here. Yet, a silent force is already bleeding it completely dry. You have been lied to about the safety of cash. Human beings naturally crave certainty when the world feels chaotic. Many investors view cash as an impenetrable safe haven today. They love its low volatility and total lack of surprises. It feels like the perfect shield against terrifying market forces. The physical paper in your wallet gives you profound emotional comfort. But this feeling of perfect security is a highly dangerous illusion. Maintaining an excess of cash causes severe and permanent damage. The very thing you trust is slowly destroying your future. The data exposes truths that nervous investors absolutely refuse to accept.
This self-destructive behavior begins deep inside the human mind. We are biologically wired to fear sudden financial losses. This psychological trap is known professionally as loss aversion bias. We feel the sharp pain of a loss much more acutely. It hurts far more than the joy of a similar win. Because of this fear, investors abandon their carefully built strategies. They demand the immediate safety of cash when markets plunge. This emotional reaction is completely natural and incredibly destructive. The human brain simply cannot handle watching wealth vanish quickly. So panicked people hit the sell button to stop the bleeding. Consider the terrifying global events of early 2020. A worldwide pandemic struck with brutal and sudden force. Global stock markets plummeted with a speed rarely seen before. Millions of terrified investors watched their life savings evaporate instantly. Desperate to preserve their remaining capital, many fled into cash. Vanguard researchers carefully tracked these exact emotional market decisions. They mapped the tragic outcomes of trying to time the market. The results paint a dark picture of human financial psychology. People traded their future prosperity for a fleeting moment of comfort.
One hypothetical investor panicked and went to cash in February. A second investor waited until the absolute market bottom in March. Both investors held their cash safely until July 2020. They believed they were protecting themselves from further financial ruin. Instead, they locked in devastating and permanent capital losses. The February seller suffered a permanent 10% portfolio loss. The March seller endured a massive 23% destruction of wealth. Meanwhile, investors who remained fully invested recovered their money completely. By fleeing to safety, the panicked sellers destroyed their own futures. Getting the timing wrong had a severe material impact on them. To understand this tragedy, we must expose the risk premium. Risk premium is the extra return investors require for taking risks. Stocks and bonds have highly variable and unpredictable returns. They carry a much higher probability of a negative outcome. To compensate for this terror, the open market pays a premium. By hiding in cash, you voluntarily surrender this massive financial reward. You give up the very engine that builds generational wealth. Cash moves your portfolio to the absolute most conservative extreme. This extreme caution comes at a devastating long-term price. You cannot grow money without stepping into the terrifying unknown.
Historical data proves the undeniable power of the risk premium. From 1901 to 2022, equities dominated cash. Global equities maintained an annual premium of roughly 6%. Bonds carried an average premium of 1.6%. When you hold cash, you forfeit these vital percentage points. Over a 30-year retirement, this missing growth compounds into absolute disaster. Giving up the risk premium dramatically increases your shortfall risk. You simply run out of money before you run out of life. Stocks are risky, but avoiding them completely is far riskier. Time punishes the fearful and heavily rewards the brave. While you hide from volatility, a worse monster finds you. It bypasses your bank locks and slips into your accounts. This invisible predator is an economic force known as inflation. Inflation relentlessly erodes the true purchasing power of your money. Your $1,000 still looks exactly the same today, but it buys significantly fewer goods than it did yesterday. A small inflation rate slowly murders your hard-earned savings. It destroys your wealth while you sleep peacefully in your bed. The cash paradox means absolute safety guarantees your eventual financial ruin. Your comfortable cash cushion is actually a slow-acting poison.
The historical record of cash is surprisingly dark and grim.
From 1960 to 2022, cash barely survived inflation. It produced an annualized real return of 0.7%. During that exact same period, stocks grew by 6%. Cash failed to provide positive real returns almost every single year. It only achieved positive real returns 4 times in 2 decades. Taxes make this terrible mathematical reality even worse for you. Interest from cash is typically taxed at your highest ordinary rate. Taxes can easily turn a small nominal return into a negative real loss. Even automated retirement vehicles struggle against human fear and panic. Target date funds are designed to balance these terrible market risks. They automatically shift from aggressive stocks to conservative bonds over time. They attempt to protect you as your retirement date slowly approaches. But a target date fund cannot stop you from clicking sell. When the market crashes, the primal urge to flee overrides logic. Investors sabotage these perfectly balanced funds by retreating to cash. They forfeit years of compounding returns because of unchecked anxiety. The cheapest option always carries a hidden, devastating behavioral cost. You quickly become your own worst financial enemy.
This is why pure independence is incredibly dangerous for investors. Do-it-yourself investing requires you to suppress your own biological instincts. Most people fail this psychological test when their money burns. A human advisor acts as an emotional circuit breaker during panics. They provide behavioral coaching that prevents catastrophic moves to cash. Research proves this coaching adds massive long-term value over time. You must accept that market volatility is the required price of admission. Without accepting this pain, your money will slowly starve to death. The silent war for your savings never truly ends. True financial safety is not found in avoiding the storm entirely, but in building a ship strong enough to sail straight through it.
Protect your wealth before the next crisis destroys everything permanently. Subscribe now and discover the secret shields used by billionaires.